You're watching Masters in Trading Live with Jonathan Rose.
Hey everybody, it's Jonathan Rose and welcome to Masters in Trading Live. At Masters in Trading Live, I get on here every day the market's open, 11 o'clock Eastern Time, go over the markets, and once in a while we'll share our trade of the day. Okay, we like to buy options. We like to gobble up premium when there's good value. The problem with those who buy options when you're buying premium, sometimes we get so antsy that we want to trade. We used to joke around in the business that just because your business card says trader, it doesn't mean that you have to trade. Some of the best traders I know are the most patient. They're the ones who are going to sit around and wait. While everybody else is antsy trying to get in the market, let the market breathe. Let the market tell you which way it's going to go and then get in there. We always talk about have a catalyst, have a reason for being in the trade. So I'm going to talk about that a little bit more today. Really cool conversation in our Discord. And I want to point this out too. Kevin, thanks for pointing this out. We talked about those who buy options don't buy December options because December goes into Christmas and man, that volatility just gets crushed. I wasn't so clear. I'm not saying don't buy December expiration options. December expiration options are not that bad, actually, because you have the election and then you have an earnings event. What I mean by don't hold December options is after the election, after earnings, at the end of November, in the beginning of December, don't expect movement. That's when we want to look at our December holdings and really just get out. Get out. Those are going to decay like mad. So right now it's in October. December options, if there's good value, remember you have the earnings event, you have election event, end of year, you're going to get a lot of movement. I just mean once we get into December, I almost fell off my chair. Once we get into December, any of your December options, that's when we want to be aggressive to get out of those. Hope that makes sense. We're going to go over what do I got. We're going to go over the Qs. We'll go over the overall market. I want to talk about a very, very important topic, convexity. We'll talk about the metals as well. Okay, I'm starting you here on just QQQs. And we talk about this often. Here are the VIX, the VIXs, the VIXI. The VIX 9-day is up about 11%, last trade 1828. The VIX 1-day is getting absolutely smushed, but it's 1 day, it expires. The rest of the VIX curve is elevated. It is absolutely elevated. So if you're looking, what do you think the market's going to do today, tomorrow, this week? You want to use these short-term risk measures. The VIX, a measure of 30 days, it gaps smartly open, right? Strong. What about if we go to the VIX 9-day? Because now we have to watch your calendar, guys, because 9 days from now, is there any big news coming? What do we have? We have Tesla's event. We have the Fed minutes coming out. But the reason we're seeing volatility get higher in this VIF, FAR 37, is election. So watch out for the reason these are going higher. That's also why I think the market is kind of like in no man's land. If anything, there's more risk, but wait until things start to move. Something that I think is somewhat interesting, and maybe it's a level that we can look for. In our Discord community, when anybody shares a trade idea, the first thing that I'm always thinking is why. Like, great. Buy the QQQs. I'm getting long the QQQs. Big deal. Why? Give us a reason. Here's something to watch out for. I have you on the QQQs monthly. We're in October 7th, it just started. Last month's high is 493. We're going to see resistance. So if you want to look at resistance, 493 is going to be some resistance up there. Whenever I'm looking for support and resistance, I'm always starting with the most amount of data and then drilling in. The market is strong. A little resistance up there, but really, market's strong, guys. S&Ps are sitting on their highs. Last week high of the S&Ps is going to be 58.22. The high before that is 58.30. So there is room to the upside. I think that we're going to go higher before we go lower. I don't think that we're going to have a huge breakout on the upside. I think that the VIX will rule the day. I think that you want to sit on your hands, and if the Qs trade up to last month's high at 493, that is an excellent place to do a short-term trade. Last month's high. Let's scoot over here. In front of you, I have a chart and what's called convexity. Now, what is convexity? Convexity is how sensitive instruments are to changes in interest rates. So I want to show you how to get to this page. You know what I'll do? I'll make it even easier. This is so important to get to this page. So if you just go to mastersintrading.com and you go under trading education. That doesn't seem right. I think I have to log in. Oh, here you go. We just posted this today. Understanding volatility, skew, convexity, and variance. So if you just go to mastersintrading.com, click on this. And I also made a full video as well that'll help you guys really, really understand this topic. It is so important. Mastersintrading.com, and then you'll find that article. I want to show you exactly how to get there too. So if you just go to Google, CME-ICS. Actually, no, CME-CVOL. CME-CVOL is what you want to go to. Hit your first link. And that'll take you right here, okay? Again, just go to mastersintrading.com, guys. Read that article to learn about this. This is something that I check weekly. I mean, I really do. It's such phenomenal data. Chicago Mercantile Exchange is the biggest exchange in the world. They do this. It's for free for everybody. And how we can use this is, if I go to the metals right here, we have the treasuries in yield, in price, short-term interest rates, our STIRs, FX, currencies, ags, energies, metals. If you just click here for energies, click here for ags. If you just click here, it'll pull up a chart. And why don't you put it on 3 years just so you can get an idea? And then down here, you can control the data. Now, this is looking at the metals complex. Metals, gold, silver, copper, platinum, aluminum. CVOL is volatility. It's just volatility. Forget CVOL, just call it volatility. So volatility right now, who has the highest volatility? Silver. Silver is, you can take these off. Silver has the highest volatility relative to the other metals. There's gold and silver. What if you go back? gold, silver, what do you notice? What I notice is silver trades with a higher volatility than gold. That's it. Why? It just does. Less people trade silver. Silver is more speculative. What about copper? You could look at silver and copper. Why in 2020, 2021 was silver vol so expensive to copper, and they come back in line? Down here, notice that copper vol got very, very inexpensive relative to silver. So these are all just cool ways to find little trade ideas. CVOL index, if you go to masterthantrading.com, we teach you about down bar, up bar, skew. Skew is what's more expensive, calls or puts? Is the market skewed toward the upside, or is it skewed toward the downside? Look at copper. Look how copper skew really, really ramped up. What did copper do recently? Copper went straight up. Look at skew. You can look at the money vol, and you can look at convexity. Convexity is going to be a name's sensitivity to interest rates. So look at this. Lines on the chart, but notice those purple ones? These guys? Yeah, those look kind of wild because that's copper convexity. Now, how can you use this to find trades? Well, I'm glad you asked. Here's copper convexity. Copper convexity in July and in August spiked. Well, if we open up a chart and we look at copper futures, you can look at copper as FCX. Plenty of companies, a lot of the Brazil companies, are going to be correlated to copper. But check it out here, because here's copper. And look at that. The two spikes in convexity were at the same time that copper was selling off, was sitting on its 200 period moving average. It was waiting to move, and that's when it had a gargantuan move. And because we talk about convexity and we talk about these key numbers in our Discord, some of our traders were able to make a whole bunch of money when we shared trades on FCX. Why did we share trades on FCX? We shared trades because copper was historically inexpensive to gold and silver, but we also had those convexity spikes. When we had those convexity spikes, we expect a big, big move relative to the interest rate decision. You could see Jerry be able to lock in 241%, Bassaholic able to lock in 225%, and the crown, the biggest return, was Kevin here, able to lock in 1,100% and still owns 3 of those. So that's how you can use this incredibly valuable information. I'm going to hop back on live. So that's what I see as the biggest area of improvement in our Discord. Watching new traders, guys, without a doubt, and get centered, everybody trades too much. Trade less. Don't wait for the market to confirm your move. Instead, have those numbers in place beforehand. If you're interested in that QQQ trade, as we get to the monthly high, set yourself an alert. If the market trades this high, then I'll get into a trade. If the market doesn't trade to this level, then I won't get into a trade. You control your position. Don't let the market force you into positions that you really don't want. In our all access portion, we're going to talk about an advanced notice trade for everybody else watching. Thanks so much. My name is Jonathan Rose. I'll see you live tomorrow, 11 o'clock Eastern Time.